Hello, my name is Joe Hoyle, and I'm on the faculty here at the University of Richmond, and I'm the co-author of your financial accounting textbook. We are getting ready to look at Chapter 6, and this chapter is entirely different than the previous 5 chapters. This chapter is basically an introduction to the wonderful world of the accounting profession. The chapter poses the question that I think is important. Why should any smart decision maker trust the financial information that is produced by an organization? Well, the answer to that question is that over the decades, the accounting profession here in the United States has been created to help give credibility to the information that is provided, to allow people, to allow decision makers to trust that information. So before you get to where you're getting ready to look at financial accounting information, I want you to understand why you can feel that you can trust this information. Now, we will introduce you here to a lot of terms that have been in the news over the last couple of years. Because of the financial crisis in the United States and the rest of the world, there's been a lot of news about financial accounting and reporting and companies and organizations. So you may well have heard of terms like the Securities and Exchange Commission, CPAs, independent auditors, the PCAOB, for example. All of those are terms that wind up in the news. I'm going to open up here with the Securities and Exchange Commission, because that is the independent agency within our federal government that oversees the entire process of the financial markets. The SEC has been around for well over 70 years, and it has many jobs. It is to protect investors. It is to make sure that sufficient information is available. It has to make sure that the markets are operating fairly. So the SEC has a lot of responsibility over what happens in the financial markets and with financial reporting. Now, one of the interesting things about the SEC is that it has chosen to not be responsible for producing generally accepted accounting principles. It has left that task, as we know from our earlier chapters, to the FASB, the Financial Accounting Standards Board. But the SEC is the government body that oversees this entire process. They have a great deal of authority and a great deal of power. As you read Chapter 6, make sure you pay attention to what the SEC does and what their responsibilities are. In addition, we do look a little here, again, at the FASB. We also introduced the Emerging Issues Task Force. Now, that group takes GAAP that's already in existence and tries to figure out ways to apply it to new situations. So they do have a very important role in establishing GAAP in this country. But having these organizations like the SEC and FASB and the Emerging Issues Task Force certainly does not mean that organizations will produce financial statements that are fairly presented. So a lot of this chapter talks about the role of the independent auditor. The independent auditor is an organization, a firm, that comes in and examines the financial statements that are being produced by a company and then reports on whether those financial statements are indeed fairly presented in accordance to U.S. GAAP. I believe that's one of the most essential roles that you'll find in accounting, that the independent auditor does that examination and provides that report. So, when you are looking at a set of financial statements, make sure to read the auditor's report to see what they have to say about those financial statements. Okay, we know who produces generally accepted accounting principles. That is the FASB. However, who tells the auditors what to do in performing an audit examination? That is the Public Company Accounting Oversight Board, also known as the PCAOB. This was a group that was created by Congress as part of Sarbanes-Oxley Act to help make the financial markets work better after a number of crises like Enron and WorldCom. How does an auditor go about doing an examination? That would seem to be a massive task. Well, there are several parts to an independent auditor's examination. They go in first and look at the internal control within a company. Now, you should immediately ask then, what do we mean by internal control? Internal control are those rules, policies, procedures that a company follows to make sure that its financial information and financial statements do produce fairly presented information. So if you went into an organization, you would find at many parts in that company places where specific rules are set up to make sure that things are done appropriately. So, logically, if a company has very strong internal control, if they have rules and policies in place to make sure that everything goes appropriately, then we would assume that their financial information is probably less likely to have a problem. On the other hand, if an organization has very sloppy internal control, the rules are not well designed and they're poorly followed, then it's certainly more likely that the financial statements might have material misstatements. So the independent auditor, who is usually a certified public accountant, a CPA, will look at that internal control to help determine how much other testing has to be done. Once internal control has been looked at, then the auditor needs to examine the account balances and the transactions to see if indeed they have been reported according to U.S. Generally Accepted Accounting Principles. It's a very important task. That's why the independent auditing firm has to be operated by people who are experts, CPA, Certified Public Accountants. They examine and they report. In the examination, they look at internal control and they look at all of the account balances to see if there's any material misstatements. Once they have done that, they provide a report that is attached to the financial statements so that any outside decision maker can look at that report. It has a paragraph to introduce the financial statements. It has a paragraph to talk about the scope of an audit examination, and it has a paragraph that will give the opinion. If the auditor believes that the auditor can give reasonable assurance that there are no material misstatements so that the financial statements are presented fairly in accordance to U.S. GAAP, then it is said to be an unqualified opinion, which means you should be able to use it to make your decisions. Now, one of the first things that students often notice when you talk about the role of the independent auditor is that the independent auditor only provides reasonable assurance. You kind of would believe that the independent auditor would give absolute assurance or a complete guarantee. Why, in this audit report, does it only provide reasonable assurance? Well, there's a couple of reasons. First, as we've talked about in earlier chapters, financial statements are full of estimates. You have to estimate the life of buildings. You have to estimate whether a lawsuit will be lost. You have to estimate how many of your accounts receivable will be collected. It's impossible to give absolute assurance about information that has so many estimates in it. So very much from the beginning, the auditor understands that perfect assurance is simply not possible. In addition, companies, especially large companies, will have millions, if not billions, of transactions. The auditor cannot look at every single one of those. There's always some possibility, even though it's very slight, there's always some possibility that something might be missed. And finally, decision makers understand. Those people in the financial markets know when they get an audit report that's unqualified, they can trust the financial statements. They can use those financial statements, but they understand that it's not an absolute guarantee of accuracy. That's not something within the ability of the independent auditor. There are interesting terms, there's interesting concepts in this chapter. This is the one chapter that really doesn't have any numerical problems. It's all about the world of accounting and the accounting profession. I think if you're going to watch the evening news and hear about what goes on Wall Street and in the world of finance, there's a lot of terms here that can really help you understand that much better. Enjoy the reading.